Let's get to Jason Ware, partner, CIO, Albion Financial Group. It's nice to see you, Jason. What are you thinking of the markets? We've had a pretty good week. We're hearing from Powell. We got our jobs. How are you feeling?
Hi, it's good to see you. Thanks for having me. We're feeling fairly optimistic on where things currently stand. Obviously, we've had a good year in the markets thus far, despite a lot of the uncertainty around trade, around Fed policy, around Brexit, geopolitical concerns, et cetera. We have a slowdown in earnings this year, and indeed probably a slowdown in the economy right now. So those things are on the forefront of investors' minds. But on balance, when we look at where we are with regards to how companies are doing and how the economy is doing, we don't think recession is imminent. Obviously, that's nobody knows for sure, but just given the preponderance of evidence, we think things are on a fairly solid footing for now.
Yeah, so I mean, a solid footing. So you don't see recession anytime soon, at least. I know that you're always saying don't time the market because nobody can do that, and go for some solid companies, right?
That's exactly right. Stick to your fundamentals, stick to solid portfolio construction, diversify across sectors, across good companies, across market caps and geographies, and of course have a sound financial plan that this investment strategy is in service to. And I think, if you get the asset allocation right, which allows you to weather the storm when markets get volatile on the equity side, and you have really good companies that have wide economic moats, I think that's the best strategy for most investors.
So I thought some of your consumer picks were pretty great. Home Depot, new high. Costco, another great mover. They've both been wonderful performers this year. You still like them despite the gains, right?
Yeah, we do. And I think as long as earnings and per share fundamentals are growing in lockstep with the stock price, then we continue to be optimistic on those companies. And I think the reality is that those are two examples of retailers that are just continuing to knock the cover off the ball. They are, quote unquote, un-Amazonable for now. They have strong brands. They have high consumer spend and nice traffic at their stores. And they also have this element of understanding and recognizing that they need to be online as well. Home Depot, for example, is doing quite well as far as their e-commerce strategy is concerned. So we continue to like both of those retailers. I mean, Costco had great same-store sales comps this morning, blew away Wall Street consensus. So as long as they continue to do that, we'll continue to be investors.
I like how, what did you say? They're Amazon, what did you say? Amazon
Un-Amazonable.
That's not the phrase you used.
Un-Amazonable.
Un-Amazonable. I think you can coin that phrase. I haven't heard that one, and it's true because they really provide something very different. I also thought your tech picks were interesting. I mean, Microsoft has been one that people have loved to own. It has served its shareholders well. Google's another one of your picks, which obviously the antitrust investigations continue not only on Google and Facebook, and so you still like it. You're willing to take a chance on both Microsoft and Google, right?
Yes, and again, I mean, our North Star when we pick companies and pick stocks is wide economic moats. And both of those companies continue to demonstrate not only growth in their end markets, and obviously, for example, with Microsoft, Satya Nadella has done a great job of re-energizing not only the company, but the entrance into new markets like cloud. And we think as long as they continue to pull that off and do so with a strong growth rate and a wide moat, then that stock can continue to move higher despite the fact that it's had a great run. Alphabet, i.e. Google, same thing. These guys continue to monetize and dominate our digital lives, whether it's in search, whether it's in video. Autonomous driving is coming, with Waymo, healthcare. They are all over the place, and they're willing to take risks and make bets on the future while continuing to dominate the secular growth markets that are really driving their stock today, that is online advertising and digital advertising. So we still like both of those companies, to be sure.
Now, do you have anything in cash? I mean, most people that I talk to that are the true experts in investing, they say you can't just move everything to cash because if you miss the best few days of a year in any given year, you miss the market. You missed the market, right? So where do you stand on the cash position in a portfolio?
Yeah, that's a really, really great question. And, we're fair, for the most part, we're fully invested. We hold very low levels of cash, somewhere between 3 and 5% we think is appropriate on the equity side. But where we try to add value to our clients is by taking a balanced approach to the overall asset allocation. So if, depending on your situation, depending on your goals, depending on your time horizon, you can be anywhere from 100% invested in equities and therefore only have 3 to 5% cash, or you might be 80-20 or a 70-30 or a 60-40. And then we have short duration, high quality bonds in service to the equity side that dampens volatility and helps the investor and client stay the course through rocky markets. So we don't really go to cash, quote unquote, when storm clouds are building, just because at the end of the day, the temptation to time this stuff typically works against you. So again, we just want to be diversified, get the asset allocation right, and have really good companies in service to a broader financial plan. And that's the best course of action for most folks.
Yeah, good advice, Jason. I know you had Verizon, Amazon, and Fiserv as some of your other picks. We don't have enough time for those, but it was great advice. Thank you so much. Jason Ware, partner, Chief Investment Officer, Albion Financial Group. Yes, indeed.